afternoon, everyone, and welcome, Dennis. It's clearly your first day here. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure should be the exact same as yesterday. Some of the sizing has probably changed, but the position disclosure is the same. Hopping over to the charts, we had a not good close. We can talk about the intraday action in a second. Let's start with the bigger picture overview. Spies are down 0.25%. We're up 30 cents after hours, so a little bit more than that. But still, tight realized vol day. I think we're all paying attention to just how much up and down these closes are to get a better idea of the potential buying that can continue to come in from vol control. Q's down 0.5%, IWM down 0.4%. So it was a down day today after a down day yesterday. Yesterday was a bloodbath. So the real question today was, are we going to get follow through? My opinion was no. I thought that the most likely thing today would be that we get some sort of choppier sideways type of action. Maybe we retrace a little bit of yesterday's trading session. Maybe we finish down a little bit, but I was certainly thinking that it was a very low probability situation that we were going to get like a major day two down similar to what we saw yesterday. Like a repeat of yesterday seemed pretty unlikely, but it was a fairly weak trading session, really, like especially I think into the close. I didn't like this close in this last 30 minutes of the day. But let's look at the daily chart before we look at the 5-minute chart. So daily chart here for the SPYs, they filled the gap. So daily chart filled the gap. You can look at the SPX as well. Filled the gap. Qs filled the gap. Tested 480 and held it as support off the open. And that's pretty much exactly what we called for. In the morning meeting, I said, once again, I just didn't have too much for today's meeting, and that's just part of trading sometimes. Sometimes you have more conviction, sometimes you have less. Feels like we're in a trickier area. I had decent conviction that we're going to have a huge downside day today, but I was like, we could trade up and have an inside day. We could trade up and maybe retrace a percentage of yesterday. We could go sideways and have chop. We could trade down and fill the gap and maybe find some gap support and then tail back up from that. Pretty much almost anything that's a possibility seemed like it was a possibility today. It really kind of felt like a coin toss to me. And on top of that, we didn't have a ton of stocks that were exciting and in play this morning that you could focus on if you didn't have as much conviction on the market. But we discussed, maybe we can find some day trades in a few Mag 7 stocks or something like that, or in the market itself, maybe in like NVIDIA if it sells off early and gets really extended down, or in like an Amazon, maybe there could be like a cute little long trade in there somewhere. So at the end of the day, it was kind of a nothing burger, but I thought that we had some incredible call outs, considering that when you look at the price action, the 5-minute here, it just looks like chop and consolidation. That's exactly what it was. We had some incredible call outs. For one, basically literally called out the low of the day today. So off the open, we gapped down, we sold off. We had a third candle down that got us to the gap fill. So this low here, 565, it's pretty much exactly the gap fill. If you combine that with the fact that you then had decent downside extension on the 5-minute chart into a third 5-minute bar down into support, and when you combine that with the fact that, at least in the back of my mind, I was thinking there should be some larger underlying support to this market now from vol control. I think we saw vol control was like a $3 billion buyer into a 1% down move today. Still some from CTAs, potentially some from these pensions. Like that, to me, that's in the back of my head as I'm looking at the setup I just described, which is third bar down into support with extension on the 5-minute chart. So I really, really like this long down here. We called it out. I bought the cues off that call out, but there was a whole ton of things you could buy. And then pretty early on, as we were bouncing back, when we got back to this 80 EMA, I always caution on counter trend trades. Book some profit at that equilibrium, book some profit at that 80 EMA, book some profit at the 21 EMA, because counter trend trades tend to fail. But I remember saying on this bar here on the way up when we first got to the 80 EMA, I said I'll be surprised or if this isn't the low of the day. I thought that this is going to be the low of the day, and it turned out it was. I even sold some 0 DTE QQQ puts at that low on the way up here just to put some money behind that thought process, and they expired worthless, so I was able to make a couple dollars there. But that was the low. We got great follow through on that. We stalled out briefly into the gap fill. You can see that with the spies. You could especially see that with the Qs. Remember, I was looking at this 485 on the Qs. I loved this downside tail here, a little higher low at 1010 where they tried to sell us back down, but immediately bought us back up. A little bit of resistance in the gap fill, a little bit of resistance at QQQ intraday 484, and then we broke higher and we continued. But as we then continued into positive territory, the message to the team became no new longs. Can't buy these longs. We can see what percentage of yesterday's move we retrace. It wouldn't have been impossible for us to trade a good bit higher than we did. We could have bought back 50% of yesterday's move. We could have traded back to QQQ 488. But once we started to really go into positive territory, it's just a bad risk reward to be doing a lot of buying at that point after yesterday's candle. You know, what percentage of yesterday's down move do you really think you're going to get? Because getting a full retracement of yesterday's down move where we get back up to 493, not impossible. Anything's possible in trading, but it's really rather unlikely. So the message at that point became no new longs. Let's book some profit. And then as we got into these highs, I had been shying away from it, but I know Josh was shorting Tesla, and then Dennis jumped in and called out a Tesla short as this thing basically got near to highs and was extremely extended. And that's about 11 o'clock. And I remember, because I always take my cues from the market before I look at any stock, and yeah, Tesla's trading with a ton of relative strength there. But I remember looking at the cues at 11 and saying, yeah, we're a bit extended on the 15-minute chart. I bet we can pull back with the market. Tesla's super extended, but also super strong. But I like the idea of putting this short on as well. And for myself, I just did it as like a quick trade. All the day trades I took today were just these kind of quicker singles and doubles. I don't really want to be putting on any new swing exposure right now. But that worked out. That worked out pretty well also. So, you know, for me, pretty much every day trade I took today made money, which is awesome. I bought the Qs off that low. I bought the Qs later in the day for this little bounce back, made a few dollars and got out of the way. We also called out like really, really well here at 2 o'clock when this 2 p.m. candle came in, which, by the way, when you see that bigger candle occur at 2 o'clock, that's probably early imbalance data that's causing that move. So at 2 o'clock, I don't have access to that anymore. I had it for months, but I had it for long enough to be able to know that if you get a 2 o'clock uptick like that, it's most likely due to pre-market buy imbalance data that's coming in. So we saw that uptick coming at 2 o'clock, and I said, hey, I think that this is an opportunity to go long versus this candle to see if we get bought up into the last 2 hours of the day. And that was working out fine until really the last 30 minutes and when the actual imbalances came out at 10 of. And that brought us back down to give us a not good close. The close was disappointing. I kind of thought that when we started to rally back off this little intraday support we made at QQQ 482 today and came in with this candle and started to grind higher, I was feeling optimistic that maybe we could get a decent close near highs. And if we got a decent close near highs, you would have one of the daily chart candles that I was kind of positing in the morning meeting that could take place today, where you get a downside tail but a decent close, maybe even it would have been a green close at that point had we closed on highs. But instead, it's not what occurred. We had a really weak last 30 minutes. and that actually brought us down to the Qs in particular, almost back to down near lows. So not a great looking daily candle for the Qs. SPY is a little bit more of a doji, but also nothing to be too excited about. And IWM also a little bit of a doji, but also nothing to be too excited about. So I think that for going forward here, though, and this is just kind of based on the data that we have, as we see the vol control step in more and more and more, and especially today with it just being a down, 0.25, 0.3% day, that we're going to continue to get a little bit of an underlying bid to this market, probably through tomorrow, and Monday is actually the last day of the month, so a little bit of pension rebal stuff there. Though that pension rebal is probably much less than it was at a certain point because the TLT has come down and the market has gone higher. At one point, we were seeing a number that was over 30 billion. I have not seen a new updated number. Maybe we'll see one tomorrow morning. I would assume it's less than it had been. But we still have that as some supportive flow. We still have CTAs as some supportive flow. We still have vol control as increasing supportive flow. And again, keep in mind, not only was that not supportive on the way down, but they were huge sellers on the way down, so it's a big switch. And I haven't seen the latest updates on the gamma numbers, but I know that the SPX gamma is becoming increasingly positive, which also creates a degree of downside cushioning. So my thought process isn't necessarily that we're going to be ripping right back up to new highs or anything like that, though we will see what happens with the tariff story as that continues to evolve, because it seems to be the biggest macro picture thing that's creating movement for us. But beyond new surprises, either positive or negative, from the tariff situation, I kind of think that we're going to mainly be tricky in here for a little while. And I said this yesterday when I was on with Sammy and JR. It's not what anyone wants, right? What everyone wants, what I want, is let's break us back down to new lows, or let's rip us up to highs. Let's continue to give these really big movements, and let's figure out how to be on the right side of them. But I actually think that the higher probability situation for at least the short term, for the next week or so, is difficult price action, where we have an underlying bid to the market that holds us up from really breaking back down to lows. And maybe at certain points you can get some squeezy price action. I don't think it's impossible for us to get back above this 576 high in the SPYs. But I think, you get back above 576, maybe you get up to 585. But I don't think it's necessarily a move that gets us back to above 600. I think it's primarily choppy-ish, difficult action. I'm just going to give some broad numbers here, where we stay between 560 and 585 for at least the next week or two, and then maybe we, in time, get more clarity from the macro story and more clarity from the market dynamic data that can enable us to have a little bit of a better edge for an eventual bigger movement in one direction or the other. So that's where my head's at for the moment, but as the data updates and as I get to see things that can adjust my thought process and thesis, who knows? Maybe by tomorrow, maybe by Tuesday, I have a different thought process where I think we can rally back to above 600 or sell to back below 550. But broadly, I think that I wouldn't be surprised if tomorrow and Monday we have decent bounce backs. I mentioned this yesterday, where I think a lot of people rushed in to sell this market yesterday, and maybe they proved to be correct and we work our way all the way back down, but I wouldn't be surprised if we frustrate those sellers by getting us back above 576 through the next several trading sessions, especially with some of that pension rebalance buying that may come in. And then frustrate them, but not really break higher either. So you squeeze out those shorts, you hurt the sellers, but never give any follow through for the buyers either. Frustrate the maximum amount of people, and then at a certain point, maybe we actually get a real move. So that's kind of where my thought process is. I wish I had a more exciting thought process where we could potentially have a lot more conviction to make a lot more money. But I just don't at this point, and I just in these times when you don't have as much conviction, I just got to repeat what I kind of always say, which is at certain points the market gives you a tremendous amount of opportunity and the stars line up, and at other points they don't. And as a trader who is doing this for a career, who does this year after year after year, it's just really important to take advantage of those times when things really line up, but also to say to yourself, you know what? In this time when things don't line up, I don't need to push it. I don't need to push it. I don't need to put myself in harm's way to potentially have damaging losses to my account when things are difficult, when things are choppy, and when things aren't giving us as much clarity. So that's really kind of just where my head's at. I'm hyped that we were able to get a bunch of really good day trades off today within the confines of choppy price action intraday. I mean, we really just had one good call out after the next. Literally every day trade I took today was positive. But I didn't take any of them with a tremendous amount of risk. I was taking them with small risk, looking to make a few bucks. That NVIDIA trade, when I got out of the NVIDIA trade, I made a few dollars. I was like, hey, I got some beer money for the weekend, and that's it. So a couple selective singles and doubles on day trades on low risk to make a little bit of money when there's some all right trades out there, which we were able to identify during the day today. But big picture, the easy money isn't there in the same way as it was for us. I don't think at the second half of February through the first half of March, where we nailed both sides of this market on high conviction ideas, and that's just fine. I know that, for myself, I've been doing this for 15 years. Good chance I'm going to be doing it for 15 more. And over the course of another 15 years, there will be other opportunities where I can have a tremendous amount of conviction. And there's going to be plenty of other spots where it's difficult and choppy, and I can relax a little bit more and make sure that I'm shoveling the snow. And that's pretty much all I've got for today's meeting. So I am happy to answer any questions that anybody may have. So kind of covers it. I'm not seeing anything immediately in the VTF, but feel free to throw any questions in there that you might have. Over on the YouTube channel, we've got Sam asking me, what is the name of the candlesticks at the very bottom? I'm not sure what time frame you're referring to, and I'm not sure when you asked the question, so I'm assuming you're asking about this candle here at 940, where we called off the low. And it's just a hammer doji. Ideally, you want that candle to be confirmed by higher volume. It wasn't, but there was enough of other things out there. The downside extension, the third candle down, support from the gap fill, support from the broader market dynamics that made me really like that spot for a long. I was buying that and calling out the long before the candle even closed as the doji. You could have waited for the doji to close and implemented more of a candlestick analysis situation and say, okay, hammer candle, that's my trade, into gap fill support, into downside extension, and I'll take it. But if this is what you're referencing, it's just a 5-minute hammer. From Kevin G, I think it's a great time to really zone in on your playbooks, even if it's 2 to 3 plays. The market will provide us with those opportunities. Yeah, so always a good idea when you're doing less as a trader because the market's not giving you more to work on other things. I don't necessarily think that if you're not trading in the middle of the day because you either hit your maximum loss for the day or because the market's not giving you a lot of opportunity, I don't think that you should just shut down the computer and go do something else. But I also don't think that you should overtrade when there's no real opportunities intraday. If there's no opportunity intraday, the best thing you can do is sit on your hands from a trading perspective. But there's so much more you can do. You can research. You can read trading related books. You can read trading psychology books. You can work on your playbook, like Kevin just said in the YouTube, to really work on your game plans for your trades and the type of trades that you like to look for, and further work on your edge. I've said it many times in the past, though I haven't said it recently. When I was a newer trader, some of the best work that I ever did that improved my overall success as a trader would be on Friday nights. Friday night after trading was always my big sparring night back when I used to fight professionally. So after sparring, I'd get back to my home and I would turn the computer on and I would open up a blank Excel spreadsheet and I would just play with numbers on game plans. If I wasn't in training camp for a fight, I might have a beer with me, and it's just me and a nice cold one and an Excel spreadsheet, and I would just play with the numbers. What if I bought this amount of shares with this amount of space and game planned it this way? What if I did it versus this way? I would just kind of imagine these types of trades or scenarios or take trades from your trading playbook and then just play with the game plans on what can maximize reward and minimize risk in different situations. So then when I was going back to actually trade, I would have all these game plans in my head and the math in my head, and already without having to think in real time necessarily, just be able to execute and know, hey, this is where I should put an offer. This offer makes sense based on this game plan because I already put a lot of work into it. And part of that, I guess, leads forward to a little bit about what we were talking about in yesterday's afternoon meeting about how my game plans at this point are so solidified in my trading that I can be managing 30 positions while having a phone call and be executing dozens of new executions because I don't even have to think about where my bids and offers are supposed to go. The game plans for my trades are just so ingrained in me that I just automatically know, like, okay, I just got filled on this bid, so that means that I have to have out this offer. And that's just from putting in the work outside of the times that I'm actually physically pressing the buttons to trade. From Rome Lee in the YouTube, are the scales or aspect ratio on your chart fixed? I'm not fully sure what the question means. So this is I can just show you and tell you. So this is a 5-minute chart, and I can scroll in or out. I can scroll back for 7 trading sessions or 8 trading sessions or whatever this is. It's as far back as it'll take me on a 5-minute chart. On a 15-minute chart, I can scroll back for, I guess it's similar, like 2 weeks or so worth of price action. If I go to a daily chart, I guess all of those, I never even realized that till right now. They're all 8 days, right? 1, 2, 3, 4. Yeah, they're all 8 days on the smaller time frames. And on daily charts, I can scroll in and out. There's also a way to be able to like scroll up and down the numbers. I don't remember how to do it though. I never really do it. Outside of that though, trading software questions, I am not the person you want to be asking. It's Pat. So I only even partially understand the question, but I hope I was able to answer it. And otherwise, if you were on the team, I would say speak to Pat because he knows all the softwares really, really well. From Joel, what do you think about Deer? I like the farming AI robotics thesis, but what I really like is the 4-year consolidation that it could be breaking out of. So Deer's not a stock I look at too often, and it's a stock that I trade even more rarely than I look at it. So I haven't spent much time on this name in a long while. I do know that they are involved in like the AI space for farming and robotics. That is something that I'm aware of. Chart I haven't looked at in a long time, but looking at it, I immediately see what you're talking about. This thing has basically been in a consolidation since 2021. A very wide-ranging consolidation with resistance somewhere around 450 and support somewhere around, I don't know, let's call it 330. It's a wide range between like 340 and really got as low as 285 at one point. But now, a little bit more recently, it's had a nice breakout of that range. So I feel like we're a bit late on that trade. I mean, nice breakout of this range to here to the upside. And then it held that as support in this pullback in the beginning of March, which is impressive when you think about what the market's done. So great pullback here March 4th, but that's relative strength compared to the market. Kind of retested the 450 resistance of the multi-year range that we were just talking about. Just move my moving averages. There we go, fixed it. So yeah, and now it's building out a wedge here. It's building out a wedge here, and it's doing it with relative strength. I don't love today's candle, but maybe above 490, this thing looks like it could try to leg up again on the really big picture. So yeah, it looks good. Don't follow the name too much or the story too much, but I'm certainly aware of what you're talking about with what they're getting into, and I could totally see them continuing to be a leader in the farming space because they have been for, what, a couple hundred years or something? I don't know. Deer's been around forever. Kind of got through the YouTube for the moment. Back over to the VTF. Yeah, TTD, definitely disappointing. I mean, it's a higher beta name, so, you know, it's going to give bigger movements with the market movements, and the market was down 2 days in a row, so not surprised to see that this is down as well. 57 is really important. 57 is what it broke out of on the way up, so it didn't breach that today, and I hope it doesn't. Maybe it will. A little bit disappointing that it couldn't quite get to my bigger target of 65, but that is also why, you know, it's hard to have targets and be super, super exact with them. My target is 65, so therefore the high is going to be 65.01. I wish it worked that way. So I'll maintain those bigger targets, and I was planning on taking a bunch of extra stock off at 65, but I was also piecing out the entirety of the way up. So I was able to make some decent cash flow for myself and a move from 54 to 62.50 or whatever. Sold some all the way up. I've been rebuying a little bit on the way down, and you know, I'll stick with the trade for a little while. I'd like to get a little bit more follow through, but I'm not going to without the market. So, you know, and that's why I did want a little bit more follow through to the market to that SPY 580, because I knew if I could get that, I'd be able to de-risk a little bit further on a couple more positions. Like, I was very, very close, and SoFi had bad news today. My target in SoFi was 14. I got up to 13.90. I even thought about liquidating the position when it was up there, and you know, again, I'm piecing out on the way up. So by the time it gets up to 13.90, I have a fairly small position, but my final offer to exit was 14.06. And I was like, you know, if I could just get a little bit more on this, I'll be 100% out. Maybe I should just head out, and I didn't. So, you know, there's a couple names I was really close to having some big de-risking on, or even fully liquidating, that didn't quite get to my price in the exact same way that the SPYs didn't quite get to exactly the 580 that I was looking for. It still could do it, but if anything, if TTD were to get to 65 now, one, I would note it's more difficult for it to do that because now the 21 EMA which is declining, is solidly below 65. But two, if the market does, I'm not saying it will, but if the market gets back above the pivot high from a couple of days ago, and that idea of yesterday having sellers jumping in too early, too fast, and they might get hurt actually plays out, and TTD does work up to 65, I'll actually end up making significantly more money in the name overall because of the pullback than if it had just gone straight up to 65. With that said, I would rather make less and just have had it got to 65 right away, so I could have de-risked a little further in that, and then SoFi above 14 where I could have de-risked a little bit further, and Path, if it could have gotten to 1150, I was going to de-risk in Path a little bit. I actually did. It got to 1141, and I was offered 1152 for a bigger sale to de-risk a little bit. That one I ended up hitting the bid for half. So at least I got out of half of that one before this one pulled back 50 cents now of what I was offered up there. But I do still have kind of that offer of up there at 1150. So I couldn't quite get. I wanted a little bit more on that upside. And then I would have had even better P&L these last couple days because I would have had a little bit less long exposure in this pullback. But it is what it is. You can't be perfect in this business. A lot of trading is more art than science. TT saying midday I like to rewatch the DO education vids and have been compiling notes with real-time screenshots from the current market. More to come on that front. Awesome. Click and drag the price to scale change. Oh, is what you're talking about? Ooh, wow, look at that. I just learned something new. Look at that. I'm still learning how this trading software works after 15 years of using it. Maybe this is what Rome Lee was asking me about. Starting to get a little trippy. Yeah, that's cool, TT. I would say a couple things. One is if anybody ever has questions about those education classes, anybody who has access to them because you're on the team, these afternoon meetings are a great time to bring them up. I also just want to repeat something that I say many times because I did have someone email me after the afternoon meeting yesterday and say, hey, I want to ask you a question, but I was concerned that it might be too beginner to ask in the afternoon meeting. I just want to reiterate this for everyone. There are no such things as questions in our afternoon meeting that are either too beginner or too advanced. All questions are welcome. So if you got questions on those training program classes, it's a great time to ask them. And if you're asking a super beginner question and somebody else on the team is a more experienced participant, it's a great opportunity for them to review their fundamentals, which are key in this business anyway. And if you are a more advanced trader and you've been doing this for a long time and you ask a more advanced question that maybe a beginner trader can't fully grasp yet, that's fine because at least it begins to plant the seeds in their brain of some more important, bigger picture concepts that they're going to want to eventually learn. So, if you got any real-time notes and screenshots that eventually you want to share to the team, I know like Mike Reed has done a great job of taking my afternoon meetings and compiling a spreadsheet where you can know on which afternoon meeting to refer to and at what time in the afternoon meeting if you want to get some specific education on a specific topic that I had spoken about in one of those meetings. So it's really cool that he's done that. So anybody who's doing any extra work that can help the team, then it's just great. So keep doing it. When trading TQQQ long, do you simultaneously short SQQQ? No, that would just be doubling my risk on the trade, wouldn't it? No, I'm just so I almost never trade SQQQ. I trade TQQQ all the time, but I almost never trade SQQQ. I don't like. I very rarely trade leveraged short ETFs. I don't like them very much. The only time I might ever trade a leveraged short ETF is because the borrow on the short, on the underlying, is really expensive, in which case then I might just go long the leveraged short ETF. But I don't like, I would rather short TQQQ than buy SQQQ. Because if I'm shorting TQQQ, then the decay is on my side. And TQQQ, especially for day trading, is almost always free to borrow. So there's no cost for me to do that. But then I get the decay working for me, as opposed to if I buy SQQQ, I have the decay working against me. And I would not simultaneously, per your question, buy TQQQ and short SQQQ, because then I'm just taking the same trade in two different products at the same time and just doubling my risk. And it's not like I have diversity in the same way where maybe I'll buy, if I think the market's going to bounce, maybe I'll buy Apple and Nvidia at the same time. I get a little bit of diversity there because they're not going to trade penny to penny together. One's going to be relatively stronger than the other, and I can get a little diversity. Whereas TQQQ and SQQQ are going to trade penny to penny together outside of any decay. So appreciate the question. Anything else, guys? Otherwise, I am happy to do a shorter meeting today. The last two meetings I know were really long because we had a ton of great questions and there was a lot to talk about, but there's a little bit less to talk about today and seemingly a few less questions from Show Up. One last one. So I took a short position in MSTR pre-market this morning which was working until I got pushed out. Is it good to get back or wait till tomorrow to see the price action and then decide? Getting back in on trades after you get stopped out or after you get shaken out is a really tricky thing, I think, because it can be very so for sure. There are times when you get shaken out and then a stock resets up and then you can get back in the same direction that you originally were, and it's a really good trade. But from a trading psychology perspective, when we get stopped out of positions, a number of potential bad things can happen to us, and I've been there on this, by the way, where you get pushed out of a position and then it ticks a few pennies into your favor on the way you were originally trying to be positioned for the trade, and then immediately you go, oh my god, I got shaken out of the trade, and then you like rebuy it or you reshort it or whatever, and it was just like a minor fluctuation of volatility, but you got in your head and you rebought or reshorted the stock immediately because it immediately was moving in the direction by a few cents on the way you thought it was going to go to begin with, and then you get stopped out again, and then you repeat it, and then you get stopped out. I've done this where it's like, oh my god, I know my idea is right, I got shaken out, look at that new low, I'm long versus the new low, and I buy a higher price than I just got stopped out at, and then I get stopped out at a new lower price, and then immediately it ticks in up again, and I buy it again at a higher price than I got stopped out at, and I get stopped out at a lower price, and then do it again, and then do it again. I've done that. I've done that where I've repeated it like 8 times at times in my career. I'm very happy to say it's not a mistake I have probably made at any point in the last handful of years or so, at least not that I can remember. But I definitely remember, back further than that, having a couple experiences of being in my head and revenge trading and saying, oh my god, I can't believe it shook me out. I can't have this work without me. And what ends up happening is you end up losing so much more than you would have lost if you just gave it a bunch of extra space to begin with, because you're just churning the hell out of the name, buying it high and selling it low and buying it high and selling it low over and over and over again. So when it comes to rebuying a position that you got stopped out of, it can just be really tricky because it's so easy for us to get in our heads and be grasping on thin air and trying to rebuy things when there was no true setup and you got stopped out for a reason. And of course, there's that one time when you get shaken out of the position and it works great and you didn't rebuy it, or maybe even worse, you did rebuy it as a revenge trade and it worked, because that just reinforces bad behavior. So it's tricky. I try, if I get shaken out of a position, to force myself to really make sure that if I'm rebuying, that there was a completely new trade setup that happened. And then if there's a completely new trade setup, it's a completely different trade, and I'm trading that new trade setup in that same stock. So that's how I try to approach it. But I don't hate the idea of, for certain people, especially if you have a problem with revenge trading, of getting stopped out of a position and then saying to yourself, all right, this means I'm done with this stock for this day. I don't hate that. At the same time, and this is also where it gets a little bit tricky, there's something to be said about when you put a trade on and you get stopped out, that you actually garnered information about how that stock is trading in the period of time in which you were in it and took that loss, where you can then use that information to make an even more educated future trade. So it's a little bit of a trade-off, and I think that the right thing to do depends on who each individual trader is as a trader. You need to know yourself. Are you the type of trader that has a problem with revenge trading, in which case maybe you need to make a rule for yourself where you take one trade in the stock per day, and if you get stopped out of it, you are 100% done with that name for the day. Or maybe that's not a problem for you, and you have rules in place where it's going to limit your revenge trading, and you're only going to get back in if there's new setups that actually appear, and then you can appropriately utilize even the extra information you have from the loss and then take a better trade. So to directly answer your question for you, Shoaib, I don't know. I don't know. I think you just need to kind of know what type of trader you are and how much do you believe in this MSTR short on whether or not you should have been pushing to get back in or not? Appreciate the question. Back over in the YouTube from Joel. I know you guys have been calling out the rotation days for a while when they happen, but does Euro consolidating and FXI sitting close to resistance scare you a bit for American markets? So they can move together, but there's certainly been some rotation. I still like FXI a lot here. I got back in Alibaba yesterday, and I'm sure glad I did because Alibaba is my second best name today. My best name is Palantir Short. My second best P&L is Alibaba Long. Alibaba finished up 3% on the day, and it closed a couple dollars off highs. It still was my second best name. So, am I worried about FXI looking up here? What's this FEZ look like? And FEZ, is that real? That candle today? Just want to confirm that. No, it's not. FEZ consolidated down there, but you could argue that FEZ is building out some sort of bull flag-ish type of pattern. No, I'm not necessarily worried about it specifically for America. I got plenty of things that I'm worried about with the American market. I got plenty of things. I know I just said that I think that the highest probability situation is more of a broader, bigger consolidation here. But bigger picture beyond that, I do still have some concerns. We talked about this a little bit yesterday in the afternoon meeting, that when we begin to see more of the economic number, like I don't really think that we've seen any economic numbers hit yet that take into account tariffs and government layoffs and potential slowdowns from employment numbers and slowdowns in like growth numbers. I know we had a GDP number this morning, but that's a backwards looking number that probably does not take into account very much at all government layoffs or tariffs. So while I think in the short run what I was describing is we might get some bigger chop in here, the bigger picture, we talked about this yesterday, I'm still very uncertain. There's a balance here that needs to be done between the possibility of good news. I mean, we talked about this in the morning meeting today. I'll pull it up real quick off Pat's note. So Pat's note had a summary of a Barclays note that came out. And I think that this just perfectly provides an example of the bigger picture uncertainty that's out there from the macro, where it said there's a 25% chance, this is from Barclays note, there's a 25% chance that pushback from corporations and voters compels Trump to de-escalate the trade war, in which case U.S. equity valuations could revisit their richest levels, driving significant price upside. That's the bull case. Sums it up perfectly. That is the bull case. And they're assigning a 25% chance of that. And that could potentially mean all-time highs for this market. SPY back above 600. Here's the bear case. The bear case is full-blown tit-for-tat trade war that delivers a major blow to U.S. corporate profits, which would shrink year over year. The full impact of Canada and Mexico tariffs in tandem with reciprocal and China tariffs could drag down corporate profit growth, create second-order effects that would likely trigger a U.S. recession, and that the S&P could fall to 4,400 in that scenario, which is down 30%. So a major bear market, much bigger bear market than 2022. Maybe not much bigger, but a bigger bear market than we saw in 2022. And they assign a 15% chance on that. So you got a 25% chance that we go to all-time highs because of tariffs improving. And this is Barclays talking. This is not me talking. My opinions might be slightly different than this. As a matter of fact, they are slightly different than this. But 25% chance of we end the trade war, we go up to all-time highs, and we reinvigorate multiples. A 15% chance that this blows up into a huge trade war that brings a recession and a major bear market. And then that leaves the other 60 5% or whatever in the middle, which is going to be the market being in the middle. So, you know, that perfectly, like, I think shows from just a different resource the exact same problem that we're kind of dealing with here. Where I don't know, we could get up to 600. We could break new lows. I mean, they're saying 4,400 as an ultimate bear case scenario. 4,400 brings us back to 2023 levels. But that's really far down from where we are currently. So I don't know. You know, we need to see bigger picture, the growth and employment data as it comes out, as it finally gets impacted from these policies, which we're yet to see. And we also need to see how those policies change over time. So I have plenty to be afraid about right now when it comes to the American markets and where they may end up in, let's call it, the intermediate term. And honestly, it's on both sides. So we'll see. And I do think, though, that in that latter case, where we see these tit-for-tat trade wars, and so you know, at a certain point, everybody loses there, by the way. But I do still think that we would see China and Europe outperform. But we'll see. From Bill, even if Trump said just kidding on these things, the damage has been done. EU defense will happen. The reliance on U.S. has proven unreliable, or at least potentially unreliable. Yeah, so no matter what, that U.S. defense, the EU defense spending is happening. So I have more conviction, honestly, on being long foreign markets than I have being long or short U.S. markets, really, at this point. So I still like the idea of having that exposure to Europe and having that exposure to China. It's what made me pull the trigger on the Alibaba long yesterday, even though I had told myself I really don't want any new positions for the most part, or if I do, I want them to honestly be shorts because they can balance me out a little bit more. But I was like, you know, I got to get in this Alibaba on this dip. I'm going to be kicking myself if it goes up again without me. And I just think that economy, which is currently having government expansion, is a good place to be diversified to and hide out a little bit. So appreciate the question, Joel. Long answer there. From Cyril, do you think that tomorrow will be tricky? I don't know. I want to assess how we gap in the morning first. I think that we're going to continue to have an underlying bid to this market. So bageled ahead. If you're like, you have to be long or short tomorrow and pick a direction, I would rather be long than short for tomorrow. But what kind of follow through are we gonna get? I don't know. We're in a tough spot here. I think every day recently here is a little bit trickier. From Jackie in the VTF, when we were trading in the equilibrium range and the ADMA is below the 21 EMA, how much extension do you look for before you consider it extended and start looking for shorts? For example, in the indexes 2 trading sessions ago, are you still looking for $10 extension from the ADMA, or does this change since the stock isn't as extended as from the 21 at that time? Sure, it's a great question. So a much smaller percentage of the time, we get what we've had here for the last couple of days, where we are extending up above an ADMA, but the 21 EMA is above that ADMA because we had traded down by so much earlier. Usually, if the market is up, the ADMA is above the 21 EMA, and if the market's down, the ADMA is below the 21 EMA. So this is certainly a rarer, I don't know if rarer is even a word, more rare situation. I still am calculating the extension in the exact same way off of the ADMA. That's how I'm doing it in that situation. Because in this type of market, it's like, you know that we're broadly bearish because the 21 is above the 8 and is declining, but we had a big kind of, for lack of a better term, bear market rally. So if we could get $10 extension above the ADMA, but it's still in a market where the 21 EMA is above the 8 and is declining, that's bigger picture bearish, and you've got extension to the upside. That's a nice short. Like, I like that as a short a lot. And we couldn't quite get there. I was really looking for that to occur a couple days ago. We had gotten like $8, I think, extended from the ADMA on the upside. If we could have gotten to like 10, we also would have been approaching that 580. That would have been that would have been a spot where I would have been adding shorts and taking off longs with much more rigor. We just couldn't quite get there, which is unfortunate because it would have been really nice for my P&L if we did. But that's how it happens sometimes. It's not always perfect. But good question, Jackie. Thank you. From Jeff in the YouTube, I see some people referencing ITB as a short or faux index for sentiment. Oh, this is the home construction ETF. What's your take on ITB's relationship with economic growth? Yeah, I don't have a really good educated answer for you on this one. Home construction, I think, is tricky. I don't necessarily think that is like something you should be using as a sentiment ETF measurement, because there's just so many things that go into home construction. It's it's mortgage rates, it's pricing. Like, there's a lot to it, but it's not really my area that I'm super knowledgeable about. And like always, I'm happy to admit that I don't know everything, and I'm also always happy to say that I don't have the answer for everything, and I don't really on this one, and I don't just make stuff up either. So you can always count on me to be the type of person who's going to say they don't know. And in this situation, I'm going to say broadly, I don't know the answer to your question. But I don't think it's as simple as just ITB tells you investor sentiment. Cool. Question is appreciated. I think we got through everything for today. Have a great night, everybody. I'll see you all tomorrow.